This lesson, I'm going to teach you the difference between a stock and an ETF. Stocks are a single share in a company. The price change happens based on the perceived value or changes that happen in the company itself and tend to fluctuate more than ETFs. It is a higher risk investment comparatively. An ETF is a collection of different stocks all bundled together in a fund. ETFs usually represent a certain industry or geographic location, such as an India ETF or an automotive industry ETF. One of the most popular ETFs has the ticker symbol of VOO. It's called a VOO, and it measures the S&P 500. The prices of your investments in ETFs fluctuate less because they're more diversified than a singular stock. Let's look at Yahoo Finance again. Thank you, Yahoo Finance, for an example of this. So what I've done is I've taken this graph and I've added Target in red, and then I've added the retail ETF in blue for you to see how price fluctuations happen between stocks and ETFs. So right here, the stock in Target, COVID had hit, and actually the ETF stock price improved faster than Target. It didn't fluctuate as low as Target did when COVID hit. As the market rebounded, Target actually passed the ETF around September of this year and has continued on and is growing faster now that the market is growing. You can see both of them are growing, but now that the market is working in a positive way, Target grows more. When it goes negative, Target goes more negative and the ETF goes less negative. So I just want to show you that great example, the fluctuation of prices of an ETF. So which is better for you? It depends on your risk tolerance. Now, if you want to be taking higher risk, then stocks are a better thing to invest in. If you want to be taking lower risks, then ETFs are the investment for you. Now, what I would encourage you to do is have both in your portfolio. So you can have some ETFs and some stocks, so that as the market goes up and down, you can have that baseline of ETFs. But then also, when you find those great opportunities with stocks, you can take advantage of those too. Here's what I'll say too, is nobody knows exactly what their risk tolerance is. It's like you have to experiment and hop in and experience the market for yourself to determine what your risk tolerance is. I remember when I just started out, I chose to start out investing in oil commodities, which is a very high risk investment. And I actually ended up losing money. But what happened was I learned a lot. I learned to invest in what I know. I also was able to experiment with something outside of my risk level to help find what type of risk level I was comfortable with. So I'd encourage you to do the same thing as you go forward. The next lesson is called Getting It Right When Getting It Wrong. What to do when you buy a stock that's price is going down. In this lesson, I'm going to show you how to get it right even when you get things wrong. Now, this is so important because you're going to make investments that you lose money on, but it's what you choose to do